Canada breaks free. Trump's trade war sparks economic divorce happening now. A dramatic escalation in Donald Trump's trade war with Canada and Mexico. For decades, Canada's economic lifeline flowed south. Roughly 75% of its exports went straight to the United States. The relationship was steady, reliable, and deeply entrenched. But that was yesterday's logic. In 2025, the U.S.-Canada trade alliance is unraveling and fast. The catalyst? President Trump's aggressive new tariff campaign. Far more sweeping than anything from his first term, this wave of protectionism is driving a wedge between two once intertwined economies. It began with a brutal blow. In March 2025, the White House doubled tariffs on Canadian steel and aluminum from 25% to 50%. Then came a cascade of new threats, a 25% levy on Canadian vehicles and car parts, followed by a 10% tax on Canadian energy exports. The message from Washington was clear: decouple or suffer. For many Canadian businesses, this wasn't just policy. It was an existential crisis. Label Pack Printing, a firm that once relied on American clients, announced it was shrinking its U.S. exposure entirely. If Trump throws a 50% tariff on our goods, it'll wipe us out overnight, the company said. Others followed suit. A costume maker dumped inventory into U.S. markets at steep discounts, while a Montreal steel supplier warned American buyers to brace for doubling prices. Prime Minister Mark Carney, during a 2025 visit to Washington, made Canada's position clear, not behind closed doors, but on camera. The old relationship with the United States is over, he declared, and what followed was a tectonic shift. Canadian companies, large and small, began reorienting their business models away from their largest historical customer. A pharmaceutical firm in British Columbia opened talks with Asian partners. A major auto supplier scaled down U.S. operations. Suddenly, the U.S. was no longer the default option. It was the risk. That word, unpredictability, became the defining threat. In response, Canada launched a bold counteroffensive, not through retaliation alone, but through diversification. In late 2024, Canada finalized a landmark economic partnership with Indonesia, eliminating over 90% of tariffs on Indonesian imports and locking in strategic mineral deals involving nickel and bauxite. But that was just the beginning. Backed by a $2.3 billion Indo-Pacific strategy, Canada began pursuing trade deals with over 40 countries across Asia and the Pacific. The approach was clear: hedge against U.S. volatility by building a vast, rules-based global network. And it worked. By 2023, foreign direct investment in Canada surged past $50 billion, a 9% year-over-year increase. Meanwhile, FDI into the United States fell by a staggering 28%. The numbers told a story. Confidence in U.S. stability was fading, and Canada was becoming the trusted alternative. Canadian Trade Minister Mary Ana put it bluntly: "We are creating predictability, not as a slogan, but as a strategy." As Trump floated new levies, including a 10% tariff on Canadian oil, Ottawa struck back quietly. It began targeting U.S. energy imports, while positioning itself as the steady hand in a storm of erratic American threats. In the eyes of the global business community, Canada wasn't retaliating, it was stabilizing. Even in the fiercely competitive auto sector, the tremors were felt. Major automakers warned that Trump's 25% tariff would add thousands to the cost of every imported vehicle. Ferrari preemptively raised U.S. prices by 10%. Rumors swirled that Honda was reconsidering a $15 billion EV project in Ontario, not because of Canadian policy, but because of American unpredictability. U.S. business groups from Michigan to Missouri issued urgent pleas to the White House: stop the tariff avalanche. With 1 in 5 jobs in Michigan tied to the auto industry, they warned, Tariffs wouldn't protect jobs, they would annihilate them. Multinational corporations got the message. Taiwanese tech giant Foxconn told investors it was already diversifying. Beyond U.S. markets, semiconductor firms scouted Canadian campuses for future R&D hubs. Asian and European companies announced billions in new battery, energy, and mineral investments on Canadian soil. Why? Because trade policy isn't just about rules, it's about trust. And in 2025, Canada is winning that trust. Despite the tariff blows, Canada's economy stayed resilient. GDP grew at a 2.6% annualized rate in late 2024, better than expected. While nearly 76% of Canada's exports still flowed to the U.S., the trend was clear. That number is falling. At the same time, U.S. exports to Canada climbed by over 1%. American farmers watched demand collapse under retaliatory tariffs. Florida oranges, Kentucky bourbon, Pennsylvania steel. U.S. automakers revised contracts to reflect rising Canadian costs. The ripple effects were becoming tidal waves. And still, the threats kept coming. White House aides floated new tariffs and joked that Canadian businesses won't have to worry about tariffs once they become our 51st state. But Canadian officials weren't laughing, nor were investors. Instead, Ottawa signed new trade agreements with the European Union, Japan, Australia, and India. It positioned itself as a treaty-backed, stable economy, one that treats volatility like poison and predictability like gold. The contrast was stark. While the United States built walls, Canada built bridges. And the world noticed. Because when a government raises trade barriers, it doesn't just punish foreign exporters, it punishes domestic buyers. And American consumers are starting to feel it. Higher grocery bills, pricier cars, rising fuel costs. What once crossed the Canadian border affordably now comes with a tariff price tag. Canada's largest auto union, Unifor, called Trump's tariffs economic sabotage. Even U.S. producers were being hurt. The logic had failed. And global business leaders were taking action. Canadian firms, once deeply tied to the U.S., are pulling away. They're opening offices in Berlin, Jakarta, and Dubai instead of Buffalo or Chicago. One Canadian executive summed it up. We're telling our U.S. clients, your government chose to make you pay more. Some U.S. customers are walking away. Others are staying, but paying the price. And now the real question isn't whether Canada can decouple from the United States. It's how fast. In a world where unpredictability drives fear and stability drives growth, Canada has made its choice. It's not playing chicken with Washington. It's building a firewall and economic web of trade partnerships designed to outlast political cycles. As Canadian Trade Minister Mary Young warned, predictability is no longer optional. It is essential. If the U.S. doesn't restore it soon, it risks not just economic pain, but global isolation.